Welcome, everybody. My name is Geoff Green, president of Green Team Realty. Thank you so much for joining us for the April housing market update. It's amazing that it's April already. We're in the thick of the spring market. We have a lot of information to show everybody. So let's jump right into it. Let's not waste any time, because I know that everybody's busy, no matter what your profession is, no matter who you are joining us. So we're going to get to our lovely panel in just a bit. And I do mean lovely. What great ladies, hard workers, very accomplished in their own trade. So we'll get to them in a bit, but let's talk numbers. So here's a snapshot of year over year, 20 versus 21 in terms of January through current time. And it's just giving us a look at a bunch of different things. Showings is up 49% on a national basis over 2020, same time period. Purchase applications up 40%. Pending deals down 0.5%, not much, but nonetheless it's down. So despite the fact that there's more showings, more purchase applications, a little less pending deals than we saw this time last year. Existing home sales, the number of is up 9%. New home sales up by 8.2%. But look at this, and this is the story we've been talking about for a year. Inventory is down by 52%. That is a crisis. That's a problem. New home inventory is down by 4.6%. We're going to talk. I got a lot of good information as it pertains to new construction. So this really is a perfect snapshot of exactly what's going on out there. If you can imagine from a realtor's perspective, showing all these homes, putting all these purchase agreements together, trying to get these deals negotiated, but there's not enough homes, and you're getting outbid, and it's just really frantic and intense and challenging for many, many buyers out there. But what a seller's market. It's a super seller market for sure. Rates are on the rise. Look at the mortgage rates. As of right now, we're about at June of 2020 levels. So rates continued to go down and down and down and down throughout the pandemic, but then things really shot up here in the beginning of the year, and rates are continuing to go up. And we're going to hear from Laura Moritz, a mortgage lender, an expert on the subject, a little bit later. But check this out. House prices nationwide recorded the largest annual and quarterly increase in the history of the FHFA HPI, Housing Price Index. The history. So things are definitely on the move upward. As you can imagine, right? Supply is down, demand is way up. What's going to happen? Price is going to go up. So it really does come down to inventory. Here's just another look at, total listings, your orange and red line versus new listings that are coming on the market, so on and so forth. Everything's down, just not enough inventory. So again, if you're a seller thinking about selling and you have a place to go to, what a time to sell. You couldn't have picked a better time ever in your lifetime to sell than right now. This is a look regionally at what's going on as far as housing inventory goes. The dark red is down 60% year over year. And then you get into 45%. And the only positive territory is in New York. And it's probably because of the city, because everybody's leaving the city and there's a lot of inventory in the city that's on the market. So is construction, right? You say to yourself, all right, well, there's no inventory. So let's get building new homes, right? Is that the answer? So let's take a look at that. So here's a look at the single family units that have been completed in the last, series of years, going all the way back to 1970. And here's the average, right? The average has not been met since the crisis took hold back in 2006. It's remarkable, right? Builders basically, a lot of people lost a lot of money and got crushed basically by the financial crisis. And in fact, builders did. And a lot of them just went away. And there's just vacant lots sitting there, but now there's other obstacles to getting these things built. Planning boards around the country are clamming up, not necessarily wanting to give all these approvals for new units. Construction costs, we're going to talk about that. But this is amazing, right? When you take a look at, how every year for the last 13 years, it's been under the average. So we're way behind where we should be on new units being created. And lumber prices are through the roof. Look at this quote here from Chuck. Supply shortages and high demand have caused lumber prices to jump about 200% since last April. I mean, it is breathtaking. He says policymakers must address building material supply chain issues to help the economy sustain solid growth in 2021. I do agree with that. I don't see that as a political hot button. I don't see them really talking too much about supply chains. I mean, if you follow the news, you read the journal, so on and so forth, chip makers, some of the auto manufacturers have shut down plants because they can't get these microchips to build the car, to put into the cars as part of their, intelligence systems. So they had the federal government had a meeting over that, but they really need to do another one about this. They need to figure this out because it's a problem. And then here's just another, I picked up on this from the NAR this last month, and I thought that this was an interesting analytic because people are going to do what they have to do, right? Like if there's no inventory, they can't get in, it's overpriced. Well, they're going to live together. That's what's happening. So the share of multi-general home buyers it's at the highest level, 15%, as it has been since 2012. So this is very much becoming a trend, and I think you're going to see this chart to continue to grow as time goes on. People are just, again, doing what they have to do. So another thing that you might start to hear about, or maybe you're thinking about it, is all the cash out refis that are happening. And that was one of the things that really led to problems back in 2006 in the financial crisis. Was people were pulling money out of their homes using it like an ATM, right? So are we seeing this same cash out refinance trend happening, and is it reaching crisis levels? So let's take a look at that. So this is the number of dollars basically refinanced as cash out refinances. And you can see that there was 321 billion done in 2006 compared to 2020, which was 153, less than half of what it was in 2006. So it's not as high, but it's still a high number. It's the highest number since the Great Recession took hold. Okay, so that's something to consider, but let's keep going. Some other things, other metrics to look at. Home price appreciation. So when you start to think of, all right, home price appreciation over the last year and the last quarter I read to you earlier is at the highest level according to that one index. And our price is starting to get so high that it's a bubble and it's going to burst and it's going to crash, so on and so forth, right? That's what we're trying to talk about here. The annual appreciation leading up to 2006, where things just started to fall apart, you can see the average was 10.3, and the last 4 years here up to 2020 have been 6.3. So while 9.2 is a big number, and we're certainly in store for a big number this year, most likely, it just is not as high as it was back before the financial crisis. Now, that doesn't necessarily tell the whole story, because there also is some other things that you have to think about, right? Like equity, as an example. So tappable equity in trillions. So there is far more equity now to be tapped than there was back in 2006, okay? The percent of cash out refis that were happening back then, 89% of all refis were cash out refis back in 2006. This is, again, 2006 versus 20, versus 33% now are cash out versus just straight refis. And then the total cashed out in billions, again, we saw that before double. And then again, the percent of tappable equity, 7 versus 2. So those are, that's showing you that it has not reached a fever pitch like it was back in 2006 as far as the cash out refis go. And then the default risk in mortgage market, and this is taking into account things like, are people taking on adjustable rate mortgages, excuse me, that are ultimately going to cost people more money on a monthly basis at some point in the future, versus, the banks taking on risk. So it's really a much lower risk environment for those that are getting these loans than it was back then. You see the variance between those two lines. And then the last one I think we're going to look at, is the months of inventory of existing single family homes for sale. So you can see that the trend although prices were increasing back in 2006, so was inventory, which is very different than what we see now, which is a true, economic supply and demand type of thing, right? Prices are rising because supply is going down. Okay. So there's an inverse relationship as far as inventory goes. So that's one more reason why, we're not necessarily going to see a bubble, so to speak. In my humble opinion, for whatever it's worth, this is what I think it comes down to. Will employers call their employees back into work at their offices in the cities throughout the country? And if so, when is that going to happen? I think that that's a key question. It's a key factor. I don't hear too many people talking about it. But the reality is the cities have been emptying out into the suburbs. And what happens? Well, the cities are, in most cases, much more expensive than the suburbs. So these people come out of the cities with these perspectives of city living and how much it costs, and they have the money and they're driving up the price in the suburbs. But at some point, if they have to go back to work in the city and they have to commute every day, I can tell you from living in, the northernly suburbs of New York City my whole life, basically, it is a brutal commute to do 5 days a week. And if these people have to go back to work full time down in New York, they are not going to want to live up here 2 hours each day, each way. It's 20 hours of commuting a week. So that's a factor. It's going to take some time for that to sink in, but at some point that's going to happen. I have to think, unless these employers are going to relocate and build their offices elsewhere or just continue to work remote, yet to be seen. I think there's definitely a change coming. All right, so let's just take a look at some stats in general. You can see the existing home sales is up 2 months in a row from any of the past 4 years. This is national. Way up in terms of price, way up. You can see it's just been really a mushroom here as far as pricing goes. So again, what a great time to sell. Months of supply, look at that variance, way down. I mean, just a huge variance there. And take a local look here in Orange County. Similar track, units sold way up here. Average sales price way up here, over any of the last 4 years, 5-year period here in Sussex County, New Jersey, just south of where I sit. Units sold, kind of a mixed bag here, but nonetheless, very strong numbers. And then price, again, way up there in Sussex County. So before we get to our panel, let's take a look at some housekeeping items. You're going to join us next month, I hope, for the next housing market update. That's Tuesday, May 18th at noon. You can stay informed, signed up to be alerted about the housing update by going to hmupdate.com. And as always, a thank you to our sponsor, NewOp, the Business Opportunity Exchange, which is a simple tool for business pros to track and exchange referrals. Sign up for free at newop.com. Okay, so let's jump into our panel. Welcome, everybody. Our producer here is going to work the views for everybody watching from Facebook and whatnot. I'm going to go to gallery view so I can see everybody. So questions, comments, or concerns? Kristi, I'll start with you since I see you right there. You can go ahead and unmute your mic.
Hello.
What are your thoughts on just the new construction end of things in general? You saw all the metrics that I put out there. You saw the quote from Chuck about the prices going up 200%. Are you finding new construction inventory out there, or is that just as tight as the existing homes?
There's a little bit more new construction than there used to be, but still not enough. We still need more.
Are you?
It's not enough there for the buyers.
Yeah, and Tammy, you can feel free to jump in on this too. And I guess it's a question for either of you. Are you seeing more dirt flying out there? In other words, subdivisions that are being cleared. You're hearing from others out there that they have builders coming through. Maybe you have builders coming through with subdivisions, or not really.
Yeah, some subdivisions, but on a smaller level. Not like they had 20 years ago when there was a much bigger influx of that.
Mm-hmm. Tammy, you're muted there.
Oh, sorry.
Yeah, no problem.
Somebody was coming in. Yes, but I don't deal with a ton of new construction, but I have some people that are looking to possibly sell their land off right now, and the builders are just scooping them up.
Yeah. I mean, it's so tight. There's so lack of inventory. You know, I was speaking with Nancy Sardo the other day, who does a lot of new construction work in the New York area. And she was telling me that builders are basically pricing their homes every 7 days. They're literally adjusting the price of the home every 7 days because materials are it's such a challenge for them. The prices just keep going up and up and up. And, you know, you can imagine, right? If the cost of a 2x4 goes up by 15%, they've got to have, 3,000 2x4s to build a home. So it's a real factor. So the pricing is changing every 7 days in new construction, which I find to be fascinating.
Wow.
So Tammy, what would you say as a realtor your biggest challenges in this market right now?
Probably right now, aside from the multiple offers, I would say all the agents asking for buyers to waive not only inspections, but appraisals. But in that situation, so many times I don't advise my buyers to waive an appraisal, depending on their financial situation. If they don't have that extra comfort, that extra money to compromise the appraisal, because I just had 2 come in under, which were the first 2 since last year, but they were 45,000 under and 53,000 under.
The
so
appraisal
it was
was.
Yeah.
So it has begun in your experience.
In my experience. So obviously a lot of agents right now are pricing homes on the lower end to get that bidding war. So sometimes they're priced a little bit under. So you do have that leeway to actually go 30, 40 over and you're still good. But 2 of mine just came back under, and one, it killed the deal. The other one, they had enough extra equity there to move around money.
So just to clarify for somebody who might be watching this, is not, an expert like you are in the industry. So if someone wants to, I mean, I guess even if they're paying cash, they can get an appraisal if they want, right? But if they're getting a mortgage,
right,
the bank requires an appraisal. Well, most banks do. Not all loan programs require an appraisal, but most times the bank requires the appraisal to be done. So what you're saying is that they are trying to structure the deal in such a way that if the appraisal comes in low, that doesn't matter. They need to move forward.
Exactly.
And are they requiring the contract deposit to be firm, meaning that the sellers get to keep that regardless of what happens with the appraisal?
Well, I think that's with any deal, right? Once you go to formal contract, there's that chance that they could lose it. But
it depends on the contract, right? I mean, most contracts, most residential purchase contracts, the money really doesn't become firm until there's a clear to close from the bank. That's when the mortgage contingency truly is waived. So are you saying that these listing agents and their attorneys and clients are requiring no mortgage contingency as part of the contract?
Basically, yes.
That's a tough stance to take, but
it is. And I pull
it's a super seller market,
It is. But I had one buyer right now. We're getting ready to close next month. She lost 7 homes since last July when I first met her. So finally she said, you know what? I'm going to waive it if that's what it takes. And of course, that was the one that came in 40,000 under. And she wanted to renegotiate. I'm like, you can't do that. That's how you got it. You actually waived it. The seller graciously took 5,000 off, not 40,000, but 5,000. And she is moving forward. She had about 100 grand of cash. So it didn't affect her like some other people it could,
Well, I mean, the gamble is that you lose your contract money if ultimately you can't move forward and close the loan,
Right.
I mean, that's what happens.
Yeah.
But
it's not with my advice. I don't advise to do that because I think it's too risky and I don't want to see anyone lose anything, but ultimately it's the buyer's decision.
Right. And not every buyer is the same, right? Like if you're worth $10 million and you're trying to buy a $300,000 house and you put down 10%, which is 30 grand, you can afford to lose 30 grand if your net worth is 10 million, right?
Exactly.
So in that case, you know, that's okay to do, right? So, but when you're not worth that much, like most of us are not, it does hurt to lose a 10% deposit or a 5% or even 10 grand, whatever it might be, you know?
Yeah, but that's why the lenders are very important. And this one, and Laura can jump in after I say what I say, but using local lenders does benefit. So this was with someone that used a lender from the city, insisted, and I didn't advise it. And that was the one that came in lower because everybody knows you could get 5 appraisals and get 5 different numbers, right?
Right.
So one that fell through last year came in 53,000 under, the deal fell apart. We got another buyer back in, and that next appraiser came in and it was 30,000 higher. So it was still less than what they were. So that's a big difference. So appraisers are very important to the part of the deal, you know?
Yeah. And at the end of the day, an appraisal is an opinion of a human being, you know,
It is,
I mean,
but
it
when
really
you use,
is.
yeah, but when you use city people and they send their Westchester and city appraisers up, I feel like they don't know the area as well as local lenders appraisers do.
Yeah, no doubt. Kristi, are you finding the same thing, or are you having a problem with appraisals?
I haven't had any I only had one last year that did not appraise. But like Tammy said, I always try to use local lenders so that you know, they know the area.
Yeah.
Just to ensure that hopefully the deal will go through.
You're right. Right. Yeah. I mean, I pretty much every month ask the question of the agents on the panel, are you having problems with appraisals? Because at some point it's going to be an issue, right? Like when the markets are making a turn one way or the others, the appraisers sometimes have a hard time buying into the numbers and it becomes an issue. And then all of a sudden you have this changing, you know, this shift. But I don't think we're there yet necessarily. But Tammy, this is the first time I'm hearing somebody having multiple problems, you know, so hopefully it's just isolated to you and it won't last much longer.
Yeah,
you know?
I hope not.
So
From
Laura,
my perspective, Jeff,
yeah, go ahead.
I found that my appraisals are actually all coming in. I don't want to jinx myself, but because we are using local appraisers. And basically a bank appraisal is, like you said, it's an opinion of value. So it's their approach to value, okay? But what value really is what someone's willing to pay for it. That's really what the definition of value is. The bank is concerned with their approach to the value, which is based on the comparable values, by using somebody who's local, who really can embrace and understand that there is a big difference between being on this side of the highway versus that side of the highway. Right now, my appraisals have been coming in fine. So the comps are there to support it because there's so much cash sales going on that are creating higher comps that I really haven't had any problem with appraisals at all.
That's good to hear. That's good to hear. So Tammy, 2-1 appraisals aren't an issue yet. All right. So I'm gonna hold out that you're a statistical outlier. You know, you're one person in a sea of agents, right? We all are. And you know, although you do a lot of business, it's still a very small percentage of the whole market. So hopefully you have had an isolated experience. And I think the message to you is that there's hope. Yeah. So I heard a great quote today by John Maxwell. If there's hope in the future, there's power in the present.
That's a good one.
Yeah, there's hope.
You know what? It in the grand scheme of things, 2 out of how many millions I've been selling, it's not bad. It's
absolutely.
It's not a major problem.
Absolutely. Okay, good. So Laura, rates are going up. Do you think that they're going to continue to go up all year long? What is your call?
Actually, the rates started going down a little bit again over the last week. So we did see that surge and things kind of chilled out a little bit. So my opinion is, yes, we're going to continue to see the rates move, and it's not going to be it's going to be going up, not down. So people's purchasing power is diminishing by the minute that they don't lock or secure housing. So yes, I do think that the rates are going to continue to go up, although right now they are going down a little bit, a couple of basis points.
Yeah, it's a double whammy, right? If you're a buyer, because prices are on the rise and so are rates. So that means it's just more and more expensive for you to buy a home. You know, that's ultimately what it comes down to.
Yeah, and there's some of the people who are holding out and trying to save more money don't realize that they're going to be able to buy less of a house, arguably,
Right.
because if they save more money, but the rates are a full percentage higher, it's still the net number is less purchasing power.
Yeah. Yeah. And I think, look, the message that I've always had for buyers, and I think it pretty much holds true in almost any market, and the message is, if you need to buy something or you have the ability to buy something, don't try to play the market if ultimately you're going to have at least a 6 or a 7, maybe a 10-year run in that home. Let's say you're in it at least 5 years, because the amount of money that you'll pay in rent, right, that you get nothing for, at least you still get the interest deduction on your mortgage. Every time you make your mortgage payment, you're getting equity in that, in your home. So it's definitely worthwhile to not rent. And also rent prices have been on the rise as the price of buying a home is as well. So it's really not a bargain to stay a renter, even if you're thinking like, oh my God, prices are so high, I don't think I should buy right now. Yeah, but mortgage rates are really low and prices are going to continue to rise. And when they stop rising, because they will, all markets go up and they come down. I don't think we're going to see a fast, steep decline like we did in the financial crisis years of 2008, 9, 10, 11, 12, where it seemed like there was no end. I don't see that happening. So the point is buy, you should continue down your path and make it happen, as challenging as it may be. All right. We lost Laura. Her connection must have went out. I actually had a mortgage question here that came in from somebody. But I guess one of the questions that's here is, how long will this current housing frenzy last? I put it out there, Kristi, that I think a lot of it has to do with the employers calling people back to work. I think that has a lot to do with it. That's just my gut feeling. How long do you think this is going to last? What do you think is going to impact? What do you think could slow it down?
I'm not really sure. I know a lot of the buyers I've talked to said that their employers have no plans of making them go back to the office, that they can continue to work from home. So I'm not really sure how long this could go on.
Tammy?
Sorry,
muted.
I was muted. Yeah, sorry about that.
No problem.
I don't know. I think I'm just reading and listening to some of these real estate moguls too, that I think it's going to continue throughout the year and maybe trickle into 2022, which I'm keeping my fingers crossed. I'm not complaining.
Yeah.
But I think it's going to keep going.
The buyers are not giving up. So
Right.
Yeah, that's important that they don't give up, and that's, I guess, the message that I'm trying to convey is, hang in there, because it's still better than renting. If you have the ability to buy, you should, because every day that you're not in there, you're not building equity, which ultimately leads to long-term wealth, which is a really good thing for everybody to have, in place for themselves. Okay. Well, let me show everybody who's joined us here the information on our panel. I don't know why I can't get to the next slide. There we are. That's how to get in touch with everybody. We spoke with Tammy Scotto, Kristi Anderson, and Laura Moritz. Again, my name is Geoff Green. These are really very solid professionals. They wouldn't be here with me if they weren't. I highly recommend, if you need to sell or buy a home in the state of New Jersey, give Kristi Anderson a call. There's her info. And on the New York side of the border, Tammy Scotto, and Laura Moritz, if you need a mortgage, she's a good one for sure. All right, everybody. Thanks for joining us. We'll see you next month.